Hey everybody, Boris with BK Forex. Welcome to the commodity dollar update for Aussie dollar, dollar CAD, and Kiwi dollar for December 18th to December 22nd, 2017. And what an interesting week it's been in the COM dollar land. Last week we said that dollar CAD was the weakest, Kiwi dollar was the strongest, and Aussie was in between. That turned out to be pretty good forecast, although we've had a lot of rolls up and down in the CAD land this week on the confusion of Governor Polis's testimony. And as we enter this week, the situation really hasn't changed much. It's really Looney's game to lose. CAD still remains the absolute weakest part of the commodity complex, and Aussie and Kiwi hold bid in a pretty impressive way. We do have a little bit of data this week that could wobble that order, but not by much. And we'll take a look at it in just 1 second. In the meantime, look at the movement in the levels as everything moved up and down accordingly. So Aussie moved up to 77 resist with 75 now, very hardcore support. Dollar CAD now is eyeing a very, very critical 30 level as 29 comes very much into view with support now only at 27. And Kiwi took out the 70s. And now 69 becomes the big support for the pair. So a big repricing in the Aussie and the Kiwi to the upside, and CAD very much to the downside as we go forward. So on the calendar, not much in COM dollar land except the Kiwi GDP, which we are actually a little bit bearish on. So that could have a little bit of a wobble impact on it. Other than that, nothing in Australia. A little bit of Canada. We have retail sales and CPI data coming up. That could have an impact. We'll have to see how strong or weak that is. And that could provide a boost to Canada if we do see a little bit of a better print. But we don't have a view on it until we get the manufacturing sales. Although Kathy is leaning forward on the CPI towards a more bullish CPI number given the sharp rise in prices. The story with CAD was kind of very interesting because it was a very, very confusing trade. And let me, I think I need to actually go maybe even to the hourly charts just to show you the vol. Look at this vol. Up, down, total fake out. Polos says maybe the market misinterpreted him about interest rates, that caution doesn't mean no. And then he comes back and says, no, we really don't want to raise rates anytime soon. It just goes to you to show you the power of monetary policy on currency trading, and more importantly, how just a few words one way or the other from a central bank could have a massive impact on the trade intraday. At the end of the day, though, basically he backed off any kind of a promise in the near term to raise rates, and that is really the key thing that's driving CAD lower in some ways. Now, 29 is a very, very big resist point. Let's take a look at the dailies. And you can see this was a failure point on November, failure point at the end of November, beginning of November, end of November. And now, of course, we're trying to make it 3 times the charm. Do we break through? I think the critical thing here is if we take out 29.50, that's a massively positive signal for dollar CAD, and again shows Canadian dollar being the weakest of the bunch on the COM dollar front. On the other hand, if we fail here, we certainly can retreat back down to the 27. But having said this, what you see over the last month and a half, actually, a series of higher lows suggesting the path to dollar CAD is to the upside. That the Bank of Canada is going to stay relatively stationary, and the Fed is going to raise rates, and differentials are going to really start to impact dollar CAD to the upside. So I think ultimately the charts are still telling us the trend is higher, and unless we break the 27 to the downside, you have to basically buy every dip in dollar CAD here going forward. That's probably one of the stronger, better impulse trades that we have on the price charts. If you look at the Aussie, it came back quite nicely. This is the daily chart, and we did come back quite nicely off the 74 support. We did fail a little bit ahead of the 76. It's certainly not impossible for us to have the 76, 77 be another resist area and a little bit of a distribution, which is why I'm cautious about trading intra-commodity currency trades, because even though the CAD is weak, both Aussie and Kiwi are running into a pretty serious resistance here, and you could have a lot of two-way action. So while I like them individually, I'm not so sure I like them on a relative basis against each other at this point because the signals are not that clear. It was a much better trade last week where it was pretty clear which way things were going. So Aussie, at this point, finding a lot of resistance in the 76, 77 area, not unusual for it to come down. But I do think if it does come down, it's not going to test the lows. And that's where buying a dip here could be a really interesting trade. So ironically enough, buying a dip in the Aussie is of course positive Aussie. Buying a dip in dollar CAD is negative Canadian dollar. Both trades similar execution tactic, but very different objectives in both trades, and kind of shows I think where everything on the charts is. And a similar story in Kiwi. Kiwi is even a little bit better than Aussie on the charts. We did back off here above the 70 handle. We couldn't hold the 70 handle. And if the GDP comes in weak, we certainly could have a little bit of a dip here. But the dip, I believe, will hold above the 68.50 unless we have markedly weak numbers. Because overall, when you think about the New Zealand economy, it remains very robust. We still have the spread on the yield carry. We still have the Fed essentially very cautious, sort of in a we're going to raise rates maybe in March at the earliest kind of a mode, and that provides enough room for us for a recovery. We held bid here for two straight times at the 68 handle, and now it really feels like we want to bust out through the 70. So here, 70.50 to the upside really opens up the run back up towards closing up this move at 72. That would be a very, very positive move. So to me, Kiwi buy the dip, Aussie buy the dip, dollar CAD buy the dip. Two of them are positive. One of them is basically a bet negative on the Canadian dollar. That's how the COM dollars shape up as the week goes by. Wish you guys the best of luck, the best trading. Boris, over now.